it had been well flagged, clearly didn't come as a surprise, but we've got Oil Search and Santos coming to a definitive agreement to merge. It's worth about $8.4 billion. Perhaps not a clear-cut path to approval, though, with Papua New Guinea's government today raising concerns that the takeover could harm its national interests. The Deputy Prime Minister highlighting the potential impact of job losses, lower market liquidity, and the loss of local ownership. But the merger of Santos and Oil Search will create the nation's largest energy play with a combined market cap of over $20 billion and is subject to both shareholder and PNG court approval. So that is, I'm still going to call it, well, let's call it a stock of the day, shall we? Santos, I actually contacted the company. It's not clear if this is going to be called Santos or they'll come up with some sort of a new name. But for the purposes of today, Santos it is. Adam Dawes, what do you make of it?
Look, first of all, I would say oil companies and energy companies basically need to either get big or go home is pretty much my response. And we've seen Woodside and BHP talk about merger of their oil and gas assets. We're certainly now seeing Santos and Oil Search looking to do the same as well. So, look, it is very much in line with what's going on with this ESG investing and all of the stuff that's going on with these guys. I really think that this is a good merger, probably potentially a better merger for the Oil Search team or the Oil Search shareholders than the Santos shareholders. But I do think that Santos has some good experience in Papua New Guinea, so they'll bring that to the table. And really, Oil Search really needs to get their Alaskan assets up and running as well. And that will be a real positive for them if they've got a little bit of extra capital. They are talking about synergies of merging the two companies between 90 to 115 million pre-tax dollar savings. So I think that's a benefit to both shareholders. But really, it's go big or go home for me on these oil and gas companies at the moment.
Well, yes, because we've seen it with BHP and Woodside. Because, Jun Bei, when you think about these oil and gas plays in the current environment, with ESG being such a concern, is that the thing? You want to be invested in the big names, the ones that can really leverage from still oil prices, gas prices, and economic growth from here.
Yeah, look, I missed part of your questions. My kids must be streaming video. I think my view is that, we have started seeing the M&A activity across all the oil majors around the world. Australia actually is a little bit slow to respond in the merger and, these major deals. In the offshore markets, we've seen it started from last year. So they need scale. And even though at the moment, operating environment is looking fantastic for the next 12 to 18 months, the oil price is tracking higher as the world economy reopens, but they certainly need scale. And the investor base certainly is going to shrink, over time with the rise of ESG conscious investing. And that's why BHP had to separating out their assets and merging into with Woodside. So we should continue to see this merger and acquisition around.
Adam, I didn't get it. Was it a buy, hold, or sell for Santos?
Well, I don't know is the honest answer. Look, Santos has always been an interesting company to sort of keep an eye on. I think you'd be best to play Woodside BHP's side of things. So I'm going to say a hold until we get an understanding of really how the deal is actually going to work and get some runs on the board for the newly merged entity. But yeah, for me, I'd probably stay even bigger in the bigger end of town and do Woodside would be my buy in the space if I'm pushed for it at the moment.
Got it. Now, perhaps we can go back to Jun Bei. You were talking about ESG. I'm keen to get the continuation of your thoughts there, Jun Bei.
Sorry, yeah, I told my kids to stop streaming videos. So look at ESG, rise of ESG, we'll see more of those, the limited investor base really for these sort of assets, and which does make those assets in the short term very, very attractive. Valuation is not very high for them to merge. It's going to create a lot of value, aside from the synergy even. So, I really like this stock. I like Santos, and I think the merger is going to create a much better business. Actually, quite contrary to Adam, I don't quite like Woodside. I think, you know, the deal is transformational, but the problem for the stock is that there's something technical for the next 12 months, perhaps, because BHP, the whole point for BHP to separating out its oil business is because its investor base is pushing for ESG friendly, you know, type of assets. So, so once the transfer, once the merger goes through, you know, BHP will sit there with 49% of the merged company, and 49% of the merged company, and then all their shareholders will get a stock, a share of that merged entity. And a lot of those shareholders are based in Europe, and they will sell those stock straight away. So you will have a war of selling for Woodside stock, you know, in 6 months' time. So it is going to put pressure on that stock, and relatively it does make Santos and Oil Search look more interesting.
Got it. Jun Bei, it's live television, it's work from home. I can picture children in another room getting very upset with you right now. But it's okay, because there are literally lemons being thrown across this ausbiz newsroom. So we're all getting distracted. It feels a little bit like a Friday. Shall we continue on?